Welcome to Gold and Silver Stacking Saturdays. In today's episode of Gold and Silver Stacking Saturdays, we're going to be covering what's going on with the gold and silver prices in 2025, how geopolitical instability and how possible market manipulation are impacting the metals markets, and why now is still the best time and the smartest time to start saving in silver and gold and start stacking those coins. Hello, everyone. My name is Rick Fronek. I'm the CEO and founder of Work Smarter for You and Silver and Gold Solutions here in beautiful Galena, Illinois. And in today's episode, I've got a I'm always excited to share this information because I got a lot of information that's going to give you the nuts and bolts of everything that's going on behind the scenes. Like I mentioned before, I try to extract what I can that's going on throughout the week and share with you pertinent information that's actually factual information that is going to help you make a more informed decision for yourself and your family and your future. And so in today's topics, we're going to be covering. The overall increases in the price of gold, silver, and other precious metals and what's driving those markets. Also, how geopolitical manipulation and what's going on across the globe is actually impacting all the markets, which you're most likely not hearing in the mainstream media because they don't report that. Okay, so and then also the gold and silver short-term and long-term breakout. Okay, now this is something that I have a couple clips that I usually like to bring in some people that I followed for a long time and share their insight on things. And I have some really interesting clips that I'm going to share with everybody. So I hope everybody enjoys the presentation. And what I usually like to do is I want to point this out too. Um, I am going to share in one of the clips. A lot of times your financial advisor, has quote unquote has your best interest in mind. Whether he or she does or not is besides the point, because if they haven't been telling you to save in the form of precious metals, then they obviously don't have your best interest in mind. But in this case here, there's been some changes, and now some of this stuff is becoming public. So one of the clips I'm going to share from Mike Maloney has actually got some information on that too. Okay. So, this is like I've shared this before, and I'm going to kind of keep bringing this up a little bit because it does have an impact on what's happening in the future here. The official gold reserve surpassed U.S. Treasury holdings for the first time in 30 years, but central banks are just warming up. This was from about 3, 4 weeks ago now that I had this on my call, and it's something that is still driving the markets. Okay, and because it's not letting up, and that's one of the stats that I'm going to share with you here today is going to show you how that trend continues to be an impact on today's markets. And then, just in case uh, you don't have time to watch the whole presentation today, or if you want to get a overview of what I share each Saturday, every Monday or Tuesday, I post on our worksmarterforyourfuture.com website. On the homepage there, you'll have a recap of today's episode. Okay, so like what I usually like to do is I like to go over the gold and silver ratios. Now, this is something that I've been doing since I started the call back, going back to the end of June when we had our pre-launch. And you see from the end of June, June 21st, that gold's at 33.69 and silver was at 36.02. Of course, now with the close yesterday's gold's at $3,888.10 and silver's at 48.05. So you see that massive jump. So if you go kind of just skip from June, July, August, and then here's over the couple of weeks in September that I have listed. So this is important because when you see the overall increase, okay, this is something where gold was holding steady around the 30, kind of fluctuating between 32 and $3,500 an ounce for the longest time, and now it's making that breakout. And same with silver. Silver was, when it hit 35, everybody was excited about that, thinking, "Oh my gosh, it's finally broke 35." And now look at we're almost eclipsing the all-time high, ever. Okay, so this is something to kind of keep in mind. But right with the gold silver ratio, that was important because it'll show you the trend and why you see the increase in why silver is going up so much. But typically, uh, the gold silver ratio is where how many ounces of silver it takes to equal 1 ounce of gold. Okay. And this week with the prices at where it's at 38.88 and 48.05, it takes 80.91 ounces of silver equal to 1 ounce of gold. And typically, in one of the charts that I'm going to share with one of the clips of Mike Maloney has a chart that has where he shows the averages. And it's kind of cool. It's like it goes back almost 30 years. his chart, but it actually shows you the trend, okay, which is really important. But last week we were at 81.61, which was actually a huge jump because if you go back 2 weeks ago, it was at 85 and a half ounces of silver. So typically there's that range of 40 to 60 to 1 where it takes 40 or 60, between 40 and 60 ounces of silver to equal 1 ounce of gold. And right now we're still in the 80s. Okay. So it's still, there's still going to be that catch up margin. And one thing that Mike does share that I want to share with everybody is how, going to 20 to 1, which would be huge. Okay. So this is kind of, it kind of puts it into focus as far as, what's potentially going to happen here. Okay, so before I get into the juicy details of the nuts and bolts of the presentation, I do want to encourage everybody. I'm going to have this link below. It's sngsolutions.org/stacking today. I just titled that. It's a link that allow you to view the 7K wealth strategies presentation. And I encourage you to do that if you're on the fence or if you're interested in saving in the form of silver and gold. I highly do recommend 7K. I've been with them for going on, it's over 5 years now, and I cannot speak highly enough of them. But as far as their price and how they handle everything, it's a nice explainer video. It gives you some details on the importance of saving in the form of precious metals, but also, what steps you can take to go about starting today if you're ready to take that step. Okay. So I just wanted to share that. So I'll have that link below and also in the comments below too. So right now is the best time and the smartest time to save in precious metals, specifically gold and silver. And this is something where, yeah, it would have been nice if you were able to do that, even back in June when I started these calls. That would be great too, because you would definitely see those gains. But is with what I'm going to share with you here today, it's still going to kind of back that up. This still is a very good time for this. Okay. So with precious metals in 2025, as of right now, we're looking at so far this year, silver's up 53%, gold is up 45%, and platinum is up 50, and palladium is up 39%. Now, this information is courtesy of SD Bullion. It's one of the companies that I do check with on the information that they provide other people. But they had a video where they had a reporter from actually India, believe it or not, that was actually sharing all the details. So these are these numbers should be accurate. And what the typical driving factors are for this right now is that the global trade conflicts and geopolitical instability. Okay, so you have all these countries that are questioning the worthwhileness of the U.S. dollar now, and even as the value of the U.S. dollar is decreased, is weakened, all these other companies are looking, or other countries are looking at finding a type of, the one thing here, and actually I'll show you in the article. It actually kind of explains a little bit better. But they're putting their money into precious metals, specifically gold, and now there's been, going back to last year when Russia started, and I'm sorry, earlier in there when it was leaked that Russia was actually stockpiling silver as a form of currency. Okay, so something to kind of keep in mind. So the central bank policies, they're diversifying away from US dollar. Now this all kind of ties in because the more the central banks purchase more and more gold and silver now, this is going to even shift the markets even higher. Okay, so even though the price of gold and silver are going up, they're still buying and stockpiling gold and silver. So that's a sign that there is something bigger on the horizon that not everybody is aware of. Okay, and then of course the Federal Reserve rate cut and the continued weaken U.S. It continues to weaken the U.S. dollar. So that's something that all these countries are watching what's happening, even though our mainstream media here in the United States is not reporting this. This is stuff that everybody does need to know. Okay, so what I want to do here is this is an article. It's actually, if I have the link down here, it's from discoveryalert.com. Okay. So this is why central banks are buying record amounts of gold in 2025. And this goes, is actually dated September 27th. Um, record, okay. How much gold are central banks actually buying? Record-breaking acquisition trends in central bank gold purchase have reached historical levels in recent years. Now, this is actually off of a chart. So if you go back to 2022, you have these are the main countries that were actually purchasing these record amounts of gold. Okay, so the central banks in these countries are so China, Turkey, and India. In 2022 was 1136, 1082, and these are tons, by the way. And in 2023, it was 1,082 tons. 2024 was 1,240. And this year, with wherever all the banks are, central banks are at, and what's projected there, it's going to be $1,300 or 1,300 tons plus. And the top three are Poland, India, and China. These figures represent the highest levels of central banks buying gold since the abandonment of the gold standard in the early 1970s. What's particularly striking is the consistencies of these purchases across diverse economies and political systems. So this is something that when you see this trend here, okay, in 2024, Russia. Uh, and this goes back to the sanctions the United States put on Russia. If that would not have happened, all these numbers would have changed, would not be as extravagant as they are. And that's when we put the sanctions on Russia for the war with the war in general. That was something, between Ukraine and Russia, we were trying to, in more or less play hardball with Russia. But in fact, because we did that, they started putting their money into gold. And that's actually made them even richer than us, if we wouldn't have put the sanctions on them. So that's kind of something to keep in mind, okay? Um, so why are central banks rushing to buy gold? It's diversification away from the US dollar. Most frequently cited reason for central bank gold purchase is its diversification away from US dollar denominated assets. While the dollar remains the world's primary reserve currency, its dominance has gradually eroded. The dollar's share of global reserves has declined from over 70% in 2000 to approximately 58% in 2025. So that's a huge jump. I mean, we were talking 25 years, but that's not a good sign. Gold's share has increased from around 8% to nearly 15% during the same period. Central banks in emerging economies are particularly motivated to reduce dollar dependency. This diversification strategy helps central banks reduce concentration risk and decrease vulnerability to U.S. monetary policy decisions and potential sanctions. So that's the whole thing is if this never would have happened with the sanctions on Russia and the Ukraine war, then like I said, none of these numbers would be the way they are right now, and we wouldn't be looking at gold as high as it is right now. Okay, so there's also protection against inflation and currency devaluation. Massive monetary expansion by major central banks since 2020 has raised concerns about long-term inflation. Fiat currencies have experienced significant purchasing power erosion. Gold has maintained its value despite periodic price volatility. In central banks managing trillions in reserves, even modest inflation represents a substantial risk to their assets' real value. And gold provides a proven store of value that has maintained purchasing powers over centuries. Okay, so this is like, and this is key, and this is why I'm sharing this and why I'm bringing this to everybody here. And I'll have the link to this article below in the body of the video as well. So if you want to read the full thing, because it's actually quite extensive, but I wanted to pull out some of the important snippets from it. So geopolitical insurance policy. In an increasingly multipolar world marked by rising tensions, gold offers unique advantages. It cannot be frozen, sanctioned, or confiscated through digital financial systems. Physically stored within a country's border or in trusted neutral location, operates outside the SWIFT payment system and other potentially vulnerable networks, and maintains its value regardless of geopolitical conflicts. This insurance policy aspect has become particularly important following the freezing of Russian central bank assets in 2022, which demonstrated the vulnerability of traditional reserve assets to geopolitical actions. And then also, I've talked before about the BRICS nations, and that's kind of come more into the spotlight over the last probably 2 years. But this was something, Brazil, Russia, India, China, and South Africa were looking for, they're looking at a gold-backed currency, okay? And this would be their way of, using another type of currency other than the US dollar as as a world monetary system. Okay, so many central banks appear to be positioning themselves for potential changes to the international monetary system. Increased discussion of commodity-backed currencies or trade settlement mechanisms Development of central bank digital currencies, CBDCs, potentially linked to gold reserves. Okay, and this, like I said, with the BRICS nations. Growing interest in new multilateral financial institutions and frameworks, which this is something that like Mike Maloney and I've been talking about this for a while as far as like a global reset of the how countries interact as far as pay for things as far as currency, what is going to be, there's going to have to be something, and everything is leaning towards a gold backed type of currency. Okay, and that's where the BRICS nations is pushing that for. I think it's the Chinese yuan is what it is it would be backed by like 40% gold. So whichever country, or whether it's the East or the Western countries, decide to do this first, that's what's going to be kind of a global shift. And that's where everything will change overnight when it does happen. By increasing gold reserves now, central banks ensure that they have sufficient holdings should any new monetary arrangements emerge that give greater prominence to gold. Okay, so this is something that keep this in mind. Okay, so I'm going to share this video from Mike Maloney. Um, and what he's doing here now, I talked about the gold, I talk about the gold silver ratio all the time. And in this video here, he takes this topic a step further, okay, and which is kind of key because even right now, and when the time he did this video, silver was at $47. Um, Even at $47 an ounce, it's still a bargain compared to the potential what he sees happening. And when you look at the trends over the course of history or the course of time here, you'll see that as well. So in this video here, let's see, let me get this going here. Like I said, everybody knows this is live, so sorry about this.
First Majestic says, while silver has had a good rally, let's not forget the basic ratio action. But
Okay, so prior to this portion of the video, this is 2 minutes and 30 seconds into the video, there was he was commenting on a tweet from another individual that had a chart that kind of showed, which didn't make too much sense, but showed, the difference in the gold silver ratio over the last 3 months. So Mike is taking it a step further and he's going back to, I believe it's 1994 in this video.
that time frame is 3 months. Let's go to all data here, which takes us back to 1994 or 1990, January 1995. And what you see here is that the average is really like below, it's 60 or below. And we're coming off this peak of 100. It was 120 during COVID. This is monthly data. So it's the average for the month. It's not or maybe it's the close of the month, but it's not daily data. If you can see this went over 120, and if it was daily data, and this went down to 30. And so if somebody buys silver today at 81, and it drops to a ratio of 20, it was 14 in 1980 when gold and silver peaked. And if it goes down to 20, which I am expecting it to blow right through. I do expect 20, and I am going to be doing this at 20, where you convert some of your silver to gold. But I'm expecting this time. So you see, back in 1980, there were huge government stockpiles. We didn't have shortages on the commodities exchange, and well, there was on the commodities exchange, but everywhere else in the world, there were stockpiles of gold and silver. There wasn't a structural deficit where we're using up more silver and throwing it away year after year after year than we are mining, shrinking the stockpiles to critically low levels. There wasn't the levels of deficit spending. There wasn't a currency crisis coming, and I believe there is. And so there wasn't these crisis levels that are going to drive the silver price as people rush into silver more and more and more. And as the media starts covering it more and more and more, when it starts setting these all-time highs, and as more of the mainstream analysts and companies, like you saw TD Securities and you saw Morgan Stanley, they're talking about this now, where they weren't before. As all of this starts to happen and people start to pile into silver, this is going to go down. I do think that somewhere 5,000 is an absolute minimum for gold, but I think that's even silly. I think we're going to be seeing $10,000 gold. Well, at a 20 to 1 ratio, that's $500 silver.
Wow.
And nobody thought that a
Okay, so I just wanted to share that because this is something that,
gold silver
whoops.
ratio of 14.
Okay. So, you think about that perspective when if you become, comes down to 20 to 1 because like with right now for every 1 ounce of gold, there's 7 ounces of silver mined from the ground. But the problem is with silver because it's used in, everything. I mean, electronics, solar panels, you name it. But we also dispose a lot of what, the electronics and everything and that it's used in. Okay. So it's not like like with gold people aren't throwing away gold, okay? Um, so it's like with silver though, because of it, just how it's used in so many different facets of our everyday living, it is actually they're mining it and it actually at some point gets thrown away. Whereas unless of course it goes into bullion or bars or what have you. Um, but in this case here, so there even though there's 7 ounces of silver mined to every 1 ounce of gold because of our usage of it, that the stockpiles are getting depleted, and that's what he's referring to there. So this is something where, as far as it was nice to see that chart. Just the average though is with it being below 60. So just to even think of that, even if we went to say even went to 60 to 1 ratio, you're still looking at a huge gain for silver. Okay. All right. So now this is now in this here, I want to share this. Now I'm only going to share a short clip on this one, okay? And it's at the beginning, but in the past I made mentions about financial advisors and that, and typically they don't recommend precious metals, or if they do, they say maybe 8% or maybe 10% or something like this. But he's going to share some clips on here, which is kind of interesting, and it's something where when you have bigger companies like JP Morgan and them recommending something else. Now, this kind of ties into what I shared last week about, I showed a video from Mike and Alan Hibbard where they showed what kind of money could move into the gold and silver markets and push that price up. And this kind of ties into that, which is pretty interesting. Okay, so let's go ahead and, like I said, bear with me here on the commercials. Well, at least it's not a political one, so that's nice. Okay.
This price suppression
All right.
actually is the great opportunity that has been provided to the precious metal.
Okay.
Wow. The guy that Barron's dubbed the Bond King, Jeffrey Gundlach, who runs an enormous bond fund, now says that he believes holding a 25% gold position isn't excessive. So here's the Bond King recommending 25% gold. What do you think is going to happen? Then I used this before, but Paulson says gold could hit $5,000 an ounce. This is just mainstream media stuff. How gold could one day hit $6,000 an ounce, according to J.P. Morgan. That was in May. Then from Simon, he says gold is returning to the mainstream finance. J.P. Morgan accepts gold as collateral. Then, just a few days later, from Correlation Economics, JP Morgan knows. And this is their recommendations for your portfolio by asset class: equities, bonds, credit, currencies, commodities. Long gold, silver, and platinum. Platinum, I'll get to that in a minute. Short oil and base metals. Now, if you're going short oil and base metals, you think that there's some bad times coming in the economy. You think that there's going to be less demand for oil, less demand for base metals. Base metals is what you build cars, and houses use copper plumbing and wire and all sorts of things. So this means an economic slowdown or even a depression. This means prices, long gold and silver, that this is where you want to protect everything. Platinum, platinum is a commodity that it's an industrial metal. It's basically a catalyst in your catalytic converter in your car. There's platinum or palladium when platinum becomes too expensive. But platinum has never been money. It isn't money now, and it will never be money. gold and silver have been money and the safe haven asset for 2,500 years. And when there's a crisis, which shorting oil and base metals says that they are expecting, people rush toward precious metals, gold and silver, not platinum, not palladium, not rhodium. They rush to gold and silver. So long gold and silver, I just don't understand why they would recommend platinum. Moving on. I used this in my silver update, but Bald Guy Money, I reported on this 2 weeks ago. The one that I was using is the one that he reported on 2 weeks earlier. The 60/40 portfolio is headed for the guillotine. A 20% allocation would blow all my forecasts out of the water. I was calling for an 8% allocation, which is 20% of the 40%. But what they want here, and so this has the potential to be huge. No, way beyond huge. Astronomical. I mean, this is like light years stuff. Morgan Stanley CIO favors a 60/20/20 portfolio. So Morgan Stanley is recommending getting rid of 50% of your bonds. This is normally 60/40, 60% stocks, 40% bonds. Get rid of half of your bonds, 50%, instead of 20% of the 40%, and get rid of half of your bonds, 50%, and that 50% you allocate to gold, and you end up with a 60/20/20. The bond market is one of the biggest markets on earth. This is just absolutely astronomical.
Okay, so with that, I did want to share that because going back to what I shared last week, as far as, what money could flow into the gold and silver or precious metals industry, and that is that if people start adhering to that advice, okay, and when you have like JP Morgan saying that, that they're, accepting that now, this is something that everybody needs to kind of keep in mind, okay? So it's something that there's been this shift, okay, because everybody's seeing this, and this is why there's red flags all over that something is happening or going to happen. Okay. And the best thing to do is just be prepared. Okay. If you can, whether it's, like I said before, even if you can save a little bit at a time, whether it's gold or silver, even, just a little bit at a time each month, maybe every other week or something like that. And that's where, like I mentioned before about that video at the beginning about the 7K, because they are a very, very, very average, everyday person, user-friendly company to work with as far as buying a little bit at a time. Like I said, I've done videos before where I bought $8 worth of gold at midnight. And actually, if you search my YouTube channel, I do have that on there. So it's something where you can do small amounts. Okay, it doesn't have to be where you're buying a full ounce or a half ounce or something like that. Okay, so kind of keep that in mind. Okay, but that's where I was saying this is important because if people start shifting their bonds, the money they have you know, in their portfolios from bonds to precious metals, that's going to even increase the value of gold and silver moving forward. Okay, and I do want to share this. Now, this is a video from SD Bullion, and it's a gentleman by the name of Trey Reek and Pierre Lasson. I'm not sure if I pronounced his last name right. He's the co-founder of Franco Nevada. Um, this is a short clip, but it gives you another perspective on what people in following the behind the scenes precious metals industries are seeing as well here. Okay, so I want to play this here. Let's see. 940. All right.
Well,
Okay.
was the remember in the ring? Yeah, sort of. Some people don't quite believe me, of course. And I know it's hard to comprehend. Right. But when you've lived through the 1970s, it was hard to comprehend $800 gold as well. Right. Okay. And what happens is a bit of a mania in the last 6 months to a year. I don't think that you're going to have 17,250 for 2, 3, 4, 5 years. But I think you will have that number posted somewhere sometime. Excellent. And part of it has to do with China. With the Shanghai Gold Exchange becoming so prominent and so much of the gold moving to China, I think that at the end of the day, what will decide the gold price is not going to be America anymore. It's going to be China. And the Shanghai Gold Exchange will turn out to be more a bit of a casino type atmosphere. And in that kind of atmosphere, you could see prices well above 17,000. And that's incredible.
Okay, because he did a talk where Pierre had said he predicted $17,250 gold. Um, so it's and so this is something where he's like what I've shared in the past and a couple of weeks back about that China and them actually basically trying to take the power away from the West as far as because everything's based on the the London Stock Exchange. Okay, so this is something that if there is this shift where China becomes the main focal point for gold and silver, this is something that's going to play another huge impact on what happens with gold and silver moving forward. And I've one of the people I do listen to quite a bit on a regular basis is Jim Rickards, and this is something, and I'll 100% transparent here. I knew he had made predictions before it, and I had heard him at one point predicting $19,000 an ounce gold. And after I saw this other clip that I just shared, I asked Chat GPT, what was Jim Rickards' prediction? So this is their information. His highest prediction for the price of gold is $27,533 per ounce, which he bases on a mathematical model that assumes a return to a gold standard with a 40% backing of the M1 money supply. He has also previously predicted prices of $15,000 and $23,000 per ounce. So I did want to share that because, yeah, Jim Rickards, if you have time to check out his channel too and his videos, a very knowledgeable individual, and I highly recommend him as well as Mike Maloney in the Gold Silver YouTube channel as well. Okay, so I did want to share that because it kind of reinforces like this guy was here. Pierre was predicting 17,250 by 2030. Jim's predictions is before 2030, but this is something to kind of keep in mind too. Okay, so this was from my September live one of my September live streams. This was a quote from the Kitco News, and the lesson from history is the same: ignore Gold's message at your peril. So if you're not being able to if you're just jumping in and trying to figure out what's going on with gold and silver, hopefully you're getting some good insight from this presentation today. But this is also from a September 2nd article. And 10 years from now, we're going to look back and say, wow, we were so stupid to think that prices now are close to a peak. Um, so this is something that with what's everybody in the markets and that's got a finger on the pulse of what's happening is seeing the same things. This is not something where it's gonna, although today I already saw stuff where people are saying, oh, silver is gonna crash. And it's like, to me, I haven't followed up on some of those videos and articles that I saw about that because it's just kind of like a clickbait thing, I think, in my opinion, because I do not see where we're at with silver. Yeah, it's the markets are going to fluctuate. Same with gold. We're at 38.88 now. I mean, it could dip down back down to 3,600 here to kind of level off and everything. And same with silver. I mean, it could drop down to like maybe 38, $39 an ounce, but it's still going to maintain that level where it's still quite a bit higher than at the beginning of the year or so. But then, of course, when it starts dipping and it kind of goes sideways for a while, that's actually a very good sign opposed to it constantly going straight up. So kind of keep that in mind too. So I'm just going to go ahead and close this out real quick here. But this is a 30-year silver price. So you see back in 1995 all the way to now 2025. And I get this from silverprice.org, and I'm not sure their close is always different than what the actual market is. So I'm not sure where. I think that might be some sort of typo or something. Each week it's actually a couple dollars less than what it actually closes at. But of course, I recommend you checking out silverprice.org and also goldprice.org because they'll show you the daily up to 20 years changes in both silver and gold prices. Okay. So this is all, and this is like I said before, the cup and handle, this gigantic cup here forming, and here's the handle. And now it's starting to go up to form another cup and handle. Okay. So that's something to kind of keep in mind too. I always like sharing that. And then this is central bank purchase. I did try to find whoops. I did try to find a up to the moment quarter going through the third quarter of this year just to show you what the charts look like, but I wasn't able to find that online yet, so I'll continue to look for that so I can share that at a later date. But this then here again, like I said, the key date was February 2022 when we put the sanctions on Russia, which is right in here, and you see what's happened. Okay, and then this is the 30-year look at gold. So, if we think about it, this is I'm sorry, this is in kilograms opposed to ounces. But yeah, so but if you go back from 1995, 1998, in the early 2000, if we only knew then what we know now, um, a lot of our lives would be a lot easier. But it kind of gives you a nice idea to see what's happening here. So as far as it ever doing, so you look at even here between 1996 and 2004 when it was staying steady in that low range, but look what's happened since. Okay, so. I'm gonna finish this out. Normally, I had the weekly prize drawing, and what I wanted to do with, uh, unfortunately, people still don't follow directions. So what I'm gonna do here is I am going to do the membership giveaway. But because I apologize for those of you that are watching this and you're this far along the video, what I will do is I will say this continue to, like, subscribe, and follow the channel. And if, interact, okay, I usually have a question that I ask people, in the comment section, or even give me your biggest takeaway on the video, because at some point I am moving forward. I am going to be giving away different things at different times, but right now, um, I probably will not be doing it every week. And like next week, this coming week is my birthday at the end of the week, and so I'm probably going to be doing a recorded video and then just sharing it online. But it's like I do need to have a day or two to kind of unwind. I've been really kind of going pretty strong here for the last 3 months, ever since I started the gold and silver stacking Saturdays. But like I said, subscribe, like, and comment on the videos. And for everybody that's been doing that, I will have something at a later date. May not be as extravagant as this giveaway, but what I'm going to do here is I'm going to try and pull this up here. Um, and what I'm going to do is undo the flippity.net thing. So everybody's names that I have that semi followed the instructions, their name is in there. Um, but just in case you were wondering, when you check out the presentation for 7K, even if you don't join 7K as or start working with them, at least you see what types of other companies are out there. So whether you like 7K or if you have another company that you're working with already, I mean, there's a lot of great ones. I mean, SD Bullion's a solid company. Gold, Silver, Mike Maloney's is a solid company. But I do need to do, and I apologize, I haven't done it yet. I do need to share a video with everyone about saving if you're actually purchasing gold and silver. And 7Ks don't want to let you do it at a dollar or two at a time. Okay, that is a fact. No other company in the world allows you to do that. Plus, you can also convert it back to fiat currency and back into your bank account and lickety split with a couple clicks of your computer mouse. And no other company allows you to do that either. But as far as the storage, if you're storing it at one of these other companies, there are monthly fees, and where 7K, they do not charge monthly fees. Part of your membership fee is pretty much your storage fee, and it's even at the prices that they have for their memberships, it's still 10 times cheaper than all the other companies out there. So I will do a video on that to kind of break it down so everybody can see that. But if you are interested, they have in your beginner at gold and silver, they have a simple 7-step process, and you just after you create your membership, you go through step one, step two, and so on. And within like 2 hours, everything you've gone through. They have little videos with every clip, so it's easy to follow. And then you're all set up and you're ready to go. Okay, so it's something that's very easy to do. Okay, so go ahead and do this here. So I'm going to do a, whoops, hang on a minute. All right, share. Bear with me 1 second. Here we go. All right. So these are the people that are semi-followed the thing here. So let's go ahead and I have their names in there, and let's go ahead and spin it. Okay. Okay. So John Cook, you are the winner. Okay. And so what I'm going to need you to do is let me pull up my PowerPoint again. Okay. So what you're going to need to do, because, and I explained this yesterday or I'm sorry, last week's video, I cannot pay create your account for you. You have to do that. Okay, so what you're going to need to do is send me an email at rick@silverandgoldsolutions.org and give me your best contact. Give me your phone number and your mailing address, but then also the easiest way for me to contact you if you have questions. Okay, well, this can be via text as well too, but once you send me your contact information, I will send you my personal phone number as well as a way to get a hold of me. But what you would need to do is you would need to, this is for the basic membership. Let me pull up let's see. Here we go. All right. Sorry. Okay. All right. Here. Oops. That was it. Sorry. Okay. So what you're going to need to do is send me your phone number and your email address. And so this is for a 1 year basic membership. It's $149 plus value. Okay, so once you create your membership with 7K, you get a $20 instant gold pay into your Sound Money wallet, and that's part of one of the steps in the 7 steps that I was showed earlier, how to create that. Okay, so it's something that so basically you're getting $20 of gold into your account, but then also you get the bonus from me, which is the Silver and Gold Solutions coffee mug, the 1 ounce copper bullion, and then the 1 ounce Buffalo Indian silver coin. Okay. But what you need to do is you need to actually pay for your account first. Okay. So as soon as you do that, I will see on my end that you created your membership. Okay. Like I said before, like I said last week, I tried doing this twice before, and the people that won the contest um, pulled some shenanigans where they sent me a screenshot of them almost creating their membership, but their transaction with their PayPal account or whatever, but they didn't actually complete it. And so I said, no, you need to complete it. Then I'll know. Then I'll reimburse you the money. So that's where, like I said, give me your phone number, and then we'll be able to communicate via text or whatever. If you want to jump on a call or something like that, we can do that too. Um, but then once you pay for your membership, and because 7K has the KYC, know your customer, so you have to do it. This is their way to prevent people from creating fake accounts and money laundering and all that other good stuff. So you have to do that first, and then as soon as you do that, and I see that you've completed your membership, then I will PayPal reimburse you the membership fee. Okay. So congratulations, John. And then also everybody, like I said, I will not be live next Saturday. I will probably do a recording because my birthday's coming up. So I wanted to make sure that I spend some time with my sons and my family. So I wish everybody my very best. I appreciate your time and just everything that I shared today with the what they're recommending with JP Morgan and all these, now that your financial advisor is recommending more instead of just a measly 8%, maybe going to precious metals or nothing at all. If that 20%, if people start adhere to that 20% advice and they take money out of their bonds and put that into precious metals, that's going to have a huge impact on the silver and gold markets because it's going to put more money in there, more demand in there. And then also what I shared with everybody on the information on China, but then also the central banks that are continuing to still purchase gold and now silver, although most of what the articles I was sharing was based on gold, but silver is in that mix too. So I hope everybody got some great insight from this. If you ever have any questions, reach out to me at rick@silverandgoldsolutions.org. I'd be more than happy to jump on a phone call, a Zoom call, or just, jump on a phone call with you and discuss things with you if you'd like. Okay. So I want to thank everybody for your time. I wish everybody my very best. I hope you had a great start to your month of October, and I will do a recording, get it out for next week. But then also, I will try to do my best to get some of these other videos that I need to get uploaded for everybody to view as far as like the um, storage for gold and silver or precious metals and what's required of you. And then also, I want to do a video of what the hidden things that some of these companies, it's not to me, I think it's unethical, but they'll show one price, but then by the time you wind up making your purchase or doing your transactions, you're paying more than somebody else. So I want to kind of do a video to share what to look out for with different companies. Okay. So I wish everybody my very best. Have a great rest of your weekend, and we'll talk to everybody again soon. Take care.